And that means we are live here on YouTube, our Tackle Trading Halftime Report, a daily stock market, commodity market show where we have some fun, break down the news, the information, the charts, and hopefully, also provide value to each and every one of you out there as a trader in your education, your journey, and also in your trading. We've got Coach Frank, we've got Coach Cody, we've got myself. Frank, how you doing today?
Doing good, Tim. I don't think you've been here since I became just the voice in the machine. I have a webcam that I can't get to work, and
He's
I'll be honest.
Being now.
I gave up. I gave up 2 weeks ago, and I just am now the man in the machine.
Yeah. So. You're like one of those Borg people. Have you been watching Picard: The Next Generation?
I'm going to wait until they kind of get the whole thing out.
Oh, I read an article on it today, and I have to go binge watch the first couple episodes. I'm such a nerd when it comes to Star Trek, and I love Star Trek. Always have, always enjoyed.
You didn't have to add Star Trek to that sentence. You could have just stopped it. I'm such a nerd.
That's true, Cody. That is true. There's no question. Hey, listen, it is cool to be a nerd in 2020. Haven't you heard, my friend?
It is, yeah.
Absolutely, no doubt about it. And if we're trading nerds, well, so be it. We'll make some money doing that as well. Exactly. Guys, we got a lot to do here today. We're going to break down market analysis. Obviously the markets are selling. That's a big fat red candle trying to find some support. We're in an intraday range. We'll go through all of the charts across the stock market as well as commodities. Interesting charts on crude oil and gold, and specifically the dollar. A lot of key earnings that we're going to get to. First thing I always want to do whenever we start a show, though, is if you are new to our channel, welcome. It's great to have you. We do this every day, about 45 minutes or an hour. We kind of play it by ear depending on how the markets are going that day. Subscribe and like it and follow us and come and join us so that you can learn. Get your butt in that seat. I think you'll learn a lot if you do it every day. Number two, if you've been watching the channel and you're not a pro member yet, there's always a 15-day trial link at the bottom, and come and join us. Perfect time to give it a trial. We're in the middle of earnings season. It's got a lot of value in it, guys. It's pretty easy call. If you're a trader and you're learning and you're looking for a community, the pro member at Tackle Trading is pretty incredible.
Absolutely.
There's a 14-day trial right there. Frankie, let's get right down to it. Big fat red candle. Is this the start of something more than just this week?
We're in a very interesting spot here on the S&P or the ES contracts here. As of this very moment, we've not broke non-intraday support, right? That support zone continues to hold. However, we have placed a lower high, right? And so
I don't know about that, Frankie.
I guess we just stuck our, I define a break by a close. I guess we did stick our nose above there by a couple cents. So if I'm an intraday player, I'm going to let the rest of the day play, but that's not a good start to it. That's where I'm going to say that's a bearish signal. Personally, we've officially in that scenario. And again, for me, the close is very important. Most of, our team who knows us, who know me, know that that's how I define breaks of support and resistance. I don't think you can spin it any other way than that's a bearish signal.
Well, even yesterday, even just to kind of show that point, yesterday, the market had a huge rally into the close. Then here we are today. And it was really interesting because my phone starts blowing up yesterday after the bell with some of the coaches over at Legacy that I travel with. I'm like, holy cow, did you see the rally? And I'm like, it's impressive. There's no doubt about it. And then boom, Amazon earnings came out. I was fully assuming, Frank, we're going to come into today and rally. You had one of the biggest companies in the world, one of the most important companies in the world, destroy their earnings report up 10%.
Yeah.
So now here we are at the intraday lows, and we're dipping our toe in below that water. And we'll come back to Amazon, Cody, back on the intraday on the S&P if you can. Thank you, young man. And, we're looking at this now on this intraday, and I'm just like, I've got to get close and confirmation. And even if and when I do, I still don't know if I'm going to make an aggressive change in my posturing. This is a weird week. We've been talking about this coronavirus. We did a podcast on it where Cody was actually there as our expert and did a fantastic job explaining it. If you've not heard that podcast yet, go back and listen to it on the Trading Justice podcast. And I felt the market was underpricing the risk all week long, Frank.
I think that's fair.
Here we are, 32.29 on the S&P. And if we do close down here and confirm, do we have support on the 50-period moving average on the daily? Do we have support at 3,200? Like, there's a lot of other layers here, don't you think?
Oh, absolutely. The way I'm going to approach it, assuming we do get that close, is next up, is the 50-period moving average. we're going to be there, and things like the Dow as well. I'm going to assume that that's the next logical support catalyst. So as far as broadly speaking, a bearish opportunity, no, I don't. That's not my kind of setup, I guess, is the best way to put it. There's lots of things. Then you've got previous price action, you've got 20, weekly moving averages, lots of whatever it is that you like to use, a lot of things to potentially act as support catalysts. With that said, we will officially, in my book at least, have made lower highs and lower lows, which is going to pull me back into, you got to be cautious. You got to be cautious mode. Just because it's a bearish signal doesn't mean I have to necessarily be bearish, but I do have to respect that as a signal. But the 50 kind of jumps out to me as the next logical stop. But, if this fear picks up, I honestly don't expect that 50 to be that big of a deal.
Yeah. No, in the short
32
term,
could be bigger than 50.
3,200, Cody. Is that what you're looking at?
And if anything, it'd be a zone between those two levels.
Yeah, a little bit of a zone.
So that's really a zone area that's going to hang out in.
Yeah, so that's where I'm looking, bearish delta, through individual companies, stocks, an option for stock report as opposed to puts on the S&P 500, if you will. That would be a signal to pull back a little bit on my personal ranking of the market, a potential hedge point. Whenever I'm a front runner, whenever there's signs of trouble, I'm not afraid to take a very, very cautious approach. On the other side of it, by creating that high earlier in the week, I think we have a pretty respectable zone that, hey, if we can break that's at least as of this moment, that would be my bull signal. So right now we've really just kind of got a big fat one weekly candle, right? And assuming we can hold that support level, that's how it'll look like, how it'll look on the close. So today's or this week's low and high, very important price points in my estimation.
I agree. Stephen actually has a really good question in the chat that I want to ask you guys. We went up so fast through these levels. Do we really have that much support at the ones we're identifying? It's a good question, because if you pull this thing back a little bit here, Cody, and you look at the last few months, it's not like there's a lot of history at those points, So now a moving average in a computer algorithm doesn't need history to know that it's hitting the 50, Frank. And that's why, the markets do pay attention to moving averages so much, but that's trend based. Is 3,200 that much of significant support? I'm not so sure.
I'll tell you when it tests. The simple truth is none of us can really know. I probably like Stephen and most everybody else, big, huge levels like that old breakout point, right?
Yeah.
That jumps out. But the simple fact of the matter is where buyers stepped in and started buying, or where sellers stepped in and started selling, is exactly what it is. So is it a big deal? Is it not? I don't know, but I'm always going to respect it, because the one thing I know for sure is last time we got to that support level, buyers stepped in. Maybe I don't think they will this time, but I do have to respect that price action.
If the market closes at 32.50, Frank, we ranked it last week on the newsletter at the 20-yard line, which if you're a pro member, I recommend you always watch the newsletter on the weekend first before you go to the reports. Then you go to the reports. That's kind of the way we've designed it. Frank, where would you rank this market? I mean, that's a big fat red candle, big, volume bars are coming in on these red candles. It has to be a change from the 20. So if we're at the 20 last week and we close right here, where are you putting this thing?
Probably the 40. If gun to my head, I would expect more downward movement. So I don't think the 40 wouldn't necessarily be be slightly bullish on Monday morning necessarily, but we do continue to have our long-term trends holding. We will have broke the 20. We still have the 50 to hold us up. So I don't think, for me, I'm not going to go bearish, but I am going to give it what I would consider pretty good downgrade. Honestly, I think it's probably a good 50 market, if I'm being honest.
Well, yeah, you're very cautious. I probably would not move it that far myself. I'm probably still around that 35 mark. Above the 50 period moving average, historically, I would still have to lean on that side a little bit, Cody, but there's a long ways to go. And by the way, that's going to be a great conversation with the coaches in the meeting this afternoon.
Absolutely.
Because this is a market you can have differences of opinion on. There's no question about it. Somebody like a Slavic or a day trader might even be shorting right here at this exact time.
Yeah, I could see
today, So I quickly flash fire through the S&P, then the Dow, NASDAQ, and Russell here, Cody, and end on the Russell because, the NASDAQ holding up a little bit better, by the way. The Dow has some real key components, IBM, Caterpillar. ExxonMobil. I mean, this is not a good look on the Dow. Worse than the S&P. Would we all agree here?
Yes.
Yeah.
I think so. And a lot of that is weakness out of companies like ExxonMobil, Caterpillar, that we saw starting to go down here today. And we'll get into some of those individual companies that did have earnings and are selling. But then the NASDAQ, is holding up better than the Dow. And so you're getting some relative differences between the different indexes. For months and months and months, we've seen them all the same for so long. That's not a great chart. It's not one that you would love. The red candle is significant, but man, Amazon is holding this up, or else it would be down 2.5%, Frank.
Oh, absolutely.
It's helping. It's helping. But yeah, this is clearly the best of the bunch. We're still well above that support zone in the NASDAQ here. This is a tricky market because it's so news based, and as Mark always calls it, that newsy stuff is kryptonite to technical analysis, right? Mm-hmm. That's why I think the cautious approach is the right approach.
Especially heading into the weekend. Traders, we're creatures of habit. Heading into a Friday, we've seen it on so many Fridays in our career, Frank, 15 years experience from you. It's like Fridays, they just get weird at the end of the day. And so traders tend to hedge and go back to neutrality or theta or whatever it is, because they don't want to deal with the unpredictability of 2 days without the markets open.
Also, I don't want to do that under the best of times.
Yeah, that's right.
Also, it being the last day of the month, you have a little bit of rebalancing in some of the larger portfolios.
Yeah, good point. I didn't even think about that. This is the last trading day of the month. Exactly. And by the way, last index here real quick is on the Russell 2000. And I mean, I don't know what to say besides short-term bearish here. You've broken below the 9, the 20, you're turning down. You've got big red candles. You've got high volume. You've now put in a lower pivot low. Now, what I said yesterday, and this is really important if you're a Russell 2000 trader, 1600 is significant on the weekly chart. Give me a quick look at that weekly as well, Cody. And I want to talk to Frank about this one because, Frank, you and Cody, when we're doing prep in those report shows and when we're in there as a team talking about markets, you're always on multiple time frames and looking at past history. Is 1600 here significant enough for you to be watching and getting interested in a buying opportunity somewhere here on the rut?
Yeah, I think so. I mean, obviously it'll depend on the price action when we get there. But that is we spent most of our year last year bumping our head into that, right? Getting knocked back down, running into it. Very big break. I mean, we screamed up, once we broke through that, we screamed up into the 17 very, very easily. That would be, kind of the old breakout, pullback, test that old resistance as new support, need some confirmation. But yeah, absolutely. That is a very attractive price point. The risk is cheap. Right. Assuming, let's say we had a magical perfect doji at 1600. So for fun and some upward movement the next day or next week, if we're still talking on the weekly candlestick, well, we know we just need to get our stop loss a little bit below 16. Right. So not a huge risk. We know resistance. Heck, we were at 17 2 weeks ago, right? Above 17. So our risk to reward becomes very attractive upon those type of pullback bounces. So yeah, that's going to be very intriguing to me. Obviously not with a big red candle like this though, kind of show us what we saw last time when we first broke out, had that little pullback. We've already seen this happen. I like it a little bit better back then because all the momentum was up. We're going to still have to deal with, the current stuff in the market, assuming we were to get that signal next week. But the price point is very attractive in my mind.
Additionally to that, not many traders use it. I personally love it. The 100-day moving average is right there at 1600 as well. I think it's definitely 16 is where I think the next level support is.
If I were bearish, I can just think the other side. If I had a bear play on the rut, I'd be getting out as we approach 16, really probably without any question. I would just time to go.
Yeah, that would make sense to me. Bring up the dollar. Let's work through the major markets. Then we'll get down to individual companies here in just a minute. Dollar coming back, filling into this. Just further proof of my conviction that this is a hard Forex market to trade this year. In fact, for a couple of years now, Frank, in my opinion, it's just been back and forth, really volatile and more of a day trader's market, quite frankly, and a carry trader's market.
Absolutely. Agreed.
I'm flat neutral here, guys. I don't know about you.
Completely neutral on the dollar.
I've been on 50 on the dollar for a long time. Because really we are in a range and I would agree. I think, I think of it as an intraday vehicle. And since I don't really do a lot of day trading, I really have very little interest in actually trading it.
Sure.
I follow it because the dollar's kind of important, but I don't really trade it, to be honest.
Oh, no, I'll follow it every day for my entire trading career. I can't imagine a time where I'm not going to look at the dollar index because even if you're trading Amazon or individual companies or crude oil, the dollar matters. There's no doubt about that. But with this dollar, though, and it's amazing that this story got buried in the headlines, it's Brexit Day. My word, we've been talking about Brexit for 3.5 years, and finally it gets here. Nobody cares.
Yep.
Bring up the pound dollar crosspair, Cody. Oh my, it's been news and news and news and dominating the headlines, and now it's getting buried. I guess you have an outbreak of the coronavirus and market volatility kicks up, and traders just don't know what to do with this Brexit thing. Frank, what's your read on this chart?
Coming out of a little wedge, a little bit of a break. I mean, that's very strong from a technical point of view, breaking that downward trend line that Cody just drew there. Also taking out the most recent swing resistance. Again, we haven't closed, but as of this moment, we've broken through that resistance. Technically speaking, I don't see any reason why we don't kind of work up to that, next level of resistance from here pretty easily. And I don't expect that to be a major challenge, although again, I do think we always respect price action regardless of what we think, because beyond that, there's some upside. So we saw that initial pop, when we got the first round of Brexit stuff. That's a good looking chart, technically speaking, I think.
Yeah, I would agree with that as well. I'm looking at the pound dollar crosspair here, and I'm thinking about the UK market, the UK economy, and it's just a really interesting situation. We're obviously talking about one of the major currencies in the world. Everybody kind of wrote Brexit off for so long. I didn't know if it was going to happen, how it was going to happen. We had all the parliamentary back and forth for years. Don't forget, when Brexit actually got voted for, the pound dropped 30% in one day. Yep. It got destroyed because everybody assumed it was going to be terrible for the pound. Now that Brexit is here, I think most investors are looking at it and saying, you know what? They'll probably be okay. Maybe they can even forge new relationships. I mean, it was not good for the pound back there in 16 when it voted. In fact, there's that candle right there. It went from 145 down to like 125, so maybe like 26%, something like that. That's and nuts. Then it kept downtrending. On the long term for the pound here, Frank, the UK is not going anywhere. They've got more billionaires in London than any city on the planet. There's deep money, centuries and centuries old money and family money that's in that community and in that culture. I actually think it's a great opportunity long term for the pound.
And actually, now that we're on the weekly, you can see that it's breaking above its 200 period weekly, which is also a very bullish signal.
Yeah. I mean, if you make me buy one of these rags, the Canadian dollar, the yen, the euro, the US dollar, or the pound, I'm probably still buying the US dollar because of the stability in our financial system. Long term, though, the pound might be the only one I could even start to wrap my head around. Now, in the short term, I still want to see what happens. We saw data out of the Eurozone, bring the euro dollar crosspair up here as well. And this is going to bleed into the UK. Guys, they're moving into a recession in some of these countries. They've got contraction, and the Eurozone had its weakest GDP number since 2014. Cody, make sense of these currency markets for me. I mean, the euro comes out with a terrible GDP number. It's up today. Brexit is happening, finally getting some action there, and then the dollar is just flat neutral. I mean, what are you seeing here, Cody?
Honestly, I haven't put a Forex trade on in about 2 weeks. I actually wrote one of the reports. I said, there's a time to go fishing. And I said, it's time to go fishing right now when it comes to Forex trading. And it's because you're right. A lot of this doesn't make any sense. It doesn't make sense as to why we're seeing a lot of these other currencies move. The only thing that I could make sense of is that we were seeing money flow into the reserve currencies. But now we're seeing it kind of flow out of the reserve currencies into things like the euro and the British pound. British pound makes sense because of Brexit. The euro does not. Like you just said, they just had terrible GDP, and yet they're up today.
Scratch your head on that one.
I'll tell you, no clue what's going on. If anything,
one currency pair that makes complete sense, though, Cody, is the Aussie. You've got weakness in China. I mean, that's going to happen. Go ahead.
I see a Head and Shoulders neckline bit break, possible retracement. So if that GDP news is bad, we get a doji, we might actually have a tradable signal. So with that, let's move to the Aussie.
Hold on. Whatever I just said, Alexa in my office thought I was talking to her. I need Alexa mute. All right. Yeah. By the way, if anybody out there has an Alexa, hopefully we don't trigger your Alexa whenever I say Alexa. And I would never want to say like Alexa, call 911 or something like that.
She's like, I hate that damn thing.
All right. Anyway, go through the Aussie here, Cody. I gotta go unplug that stupid thing. I'll be right back.
All right. So the Aussie is definitely, so it had the head and shoulders. It didn't even get a retracement. It just, as soon as it broke that neckline, started breaking down, and so did the New Zealand dollar. And this is very curious in the fact that the Aussie and the New Zealand dollar were two of the strongest currencies over the past couple months. Why do I keep zooming in like that?
Mm-hmm.
So the fact is they're breaking down doesn't make much sense either, other than the China and all the trade they have to deal with China is affecting them and their currency directly. Now, what does baffle me in this is they do have the trade they have to do with China that affects their currency, but these are also gold-backed currencies. During times of uncertainty, gold goes up. Gold going up while these are gold-backed currencies doesn't make sense to me that the currencies are dropping while gold's going up, but yet their trade might be hindered. I don't know. It's another head scratcher to me.
Yeah.
No idea.
Yeah. Well, I mean, it's going to always be sensitive to risk and news out of China. We saw it with the trade war. The Aussie did. I mean, it's not just about the commodity back behind it.
I understand. It's just two conflicting points, and obviously the trade is the one that's winning.
Hey, maybe sell the fiats and just buy Bitcoin. It's the best performer this year so far. It's up at 92.70. I'm the last coach, Frank, that still has an opinion on Bitcoin that is bullish. And yet I get beat up all the time and get shaken off that opinion. I'm a wimp until I'm right.
Tim, were you on the dad joke where I challenged Noah to a dad joke competition on the halftime report?
I don't remember that one. I do remember you doing it. I wasn't on it though. Yeah.
All right. Well, one of my dad jokes was how do you know if a trader owns or trades Bitcoin? They tell you.
yeah, it is something we do talk about.
So
quite
as we were
often.
talking
we'll
currencies,
let you know.
They're like Bitcoin. Bitcoin.
Touche, young man. Hey, it's at the highest price, up $2,000 this year on the Bitcoin dollar cross pair, looking pretty good. And, Reversal signals chart looks good, Frank.
The technicals look.
Go ahead, Cody. About Bitcoin is it's actually starting to create technical patterns, and I like that. Before, when it was just all over the place, you couldn't trade it, couldn't short it, no options, just get on Coinbase and buy it, and then just watch what the chart does. There was no way to actually use technical analysis with it. Don't get me wrong, during that time is when I made my money on Bitcoin, but I like this more because you can see that wedge broke out of that wedge, popped up, retraced, popped again. So now we have a bullish retracement that played out. Elliott wave theory, I wouldn't necessarily count this one. I would count this as 1, 2.
Listen, I'm in a good move. Don't draw Elliott wave counts for me. I'm in such
you don't like Elliott wave?
No.
What is wrong with you? What signals do you use? You don't like Elliott wave.
Price action, kid. Price action, trends, moving averages, things that actually matter, not made up theories from the 1930s that people try to find value in. So let's punt.
You mean the theories that
agree to disagree
analysis? Those theories, the ones that started technical analysis as an overall study of the market. Yeah, those trends.
Move on to crude oil.
The punt is official.
Crude oil at 51.22. Get down here trying to find support. You guys support anywhere in a zone. By the way, this is why they always talk about support being a zone. If anybody tells me they know where between 50 and 52 that support is, they're better technicians than I am, because I'm looking at all those tails down there, Frank, and
or
quite frankly, it's all the way down here. So how do we treat this, Frank? This is a tough one for me. All month long, crude oil, sell. This coronavirus, obviously sensitivity to China, you disrupt global economic systems, it can cause problems. Markets are pricing that risk in. It's down. It's bearish right now. What's your read?
This is going to be fascinating. We talked about it last week. This is such an important price technically that something's going to have to give. Either the fear happens and takes us out, and I mean, That's a big, ugly break in that scenario. Or we actually start to consolidate a little bit, little back and forth before starting to, maybe show some signs of life. Now the price is very attractive, and while I would never advocate the blind bet, if I were ever going to blind bet something, it would be 50 holding on crude right now from a technical perspective. And that's how I like to keep things, because I don't want to try to figure out the news, because I'll probably be wrong. But at this point in time, look back, where we've seen it before. Last time's a really good example back in October, where we consolidate a little bit. We actually push above that 90 MA. Now, traders are going to use all sorts of different signals, but we started to see some signs of positivity, right? We break above the 9, we pull back, we hold support, and we get into the moving average soup. But that's what happens when you're sideways. So let's start to see some positive momentum before we get too crazy. I would expect that we'll see it together next in the next week or two if we're going to hold this support zone. On the other side, if that gives out, if that's not a bearish signal, I don't know what is. So this is we need to be patient, but this is a very important price point. There could be a really good opportunity in the next week or so. We're just going to have to let it develop.
It's a really good example in charting about levels, because 50-52 in here where the zone is, if you break it, you don't got much support for another $10. It might be 40-42 somewhere in there. If you go back and look at the long-term charts, it was down at that 42 zone, and you got a quick rush down. That's another 20% risk here, Frank.
If you kind of play the story together, we're fearful into support breaks. We're still fearful, right? And now there's not that side of it. Someone out there saying I'm buying right now, right?
Oh,
because
I'm sure.
of the price, but there's that big zone of nothingness beyond that. If I had anything on the bull side and we clearly break 50, I would assume 45 is just going to happen. In best case scenario.
Yep. And I know this has been news driven, but when is crude oil not news driven?
Yeah. Sometimes more so than others, right?
Sure.
It's just sensitive.
It's been sensitive like crazy. Natural gas, real quick peek at it. Not much there. It is fading down here with warm weather. It's broken down below its trends. Clearly bearish. Moving on to the gold market. Gold here until it breaks above 1600. Nothing to see here, in my opinion. I would assume it would have had more bullishness, but in general, it's had a nice pop this year. Even started at around 1530, so we still are up $50-$60 an ounce here, Frank. Pretty good looking chart, in my opinion. What you read on gold?
Yeah, it's been kind of a mellow. We had the pullback right after that initial pop, and it's just been one of those worm burners where it just kind of chops, and it doesn't really seem like it's doing anything. And then all of a sudden, you're like, oh wow, we're up 25 points from the last week. So, it continues to be an attractive area, I think, with all of the fear within the market. Technicals do look good. The entries, you're probably already in that retracement, or you're trying to figure out how you're going to, call the break. Sounds like you're calling at 16. That seems as good of an argument as any. You could, use the weekly high. Heck, you could use the high from the monthly chart, I guess, if you wanted to, or even look intraday. But showing,
I don't really swing trade gold anyway. The thing about it is I'm not looking to add to my positions up here personally. That's just a personal perspective, because I already have long gold positions. You know what I mean?
So it's basically, do I want to sell something?
Right.
Do I want to hedge something? And I could get behind that.
And I'm not selling here, even though if you're just a pure trader of gold, I could see why you could make an argument. Hey, take a little off the table. If you've made money on something, there's that old saying, never go broke taking a profit. But I'm a trend following trader. I'm much more patient with my profits, Frank. I've had to learn that through a 15-year career. Be patient with good trades, Be very quick to get rid of a loser, like the Dallas Cowboys, Cody. You should have found a new team a long time ago.
Those are known as bandwagon hoppers. A true fan is always a fan.
I know.
Spoken like a true loser.
Spoken like a Cowboys.
Hey, I'm a Bronco fan, man. So I don't have a lot of room to talk these days.
The Bears and the Broncos suck.
I'm just messing. Hey, it's Super Bowl. I got football on my mind. All right, it's Super Bowl weekend. We'll have to get you guys' picks on who you think's going to win the game. Should be a real fun, good game, guys. Chiefs and 49ers, both two of the best teams in the league, Frank. So
it's going to be fun. It's going to be fun. Looking forward to it.
I'm very much looking forward to it.
Although I'm sad, the last game of football of the year, that's kind of sad.
It's always sad when you get to that point. There's no question about it. Individual companies, we're going to go through here just real quick. If you are watching our show right now, welcome. And if you're got your fingers on the keyboard, you're paying attention, just put in a hashtag team tackle, which is the official hashtag we always use when we're communicating. Let us know how you're doing out there. Love to have you guys popping in here live and watching it. And if you are watching the replay, put a comment in below. It's always great. I know Cody goes through and reads those and reviews them. If you think we're just some sell side hacks, you can do that as well. We got that a couple weeks ago, Frank.
I saw that. I think Mark took it personally.
Oh, he didn't like it. Matt didn't like it either. It was fun. I was laughing. It is what it is. Can't please everybody. And by the way, guys, always standard offer. We got a 15-day trial of our pro membership. We're going to be putting some real good reports out every weekend. And this weekend is going to be really important. Not a better time to try us out, and click that link underneath and go set up a 15-day trial. And just go see what we do. You know, the pro membership, we've got like 20 hours of content every week that you can go through and get the value out of it. It's pretty much a no-brainer in my opinion. Guys, Amazon, let's get down to it. There's not a more important company to talk about here today than Amazon, in my personal opinion. Cleared the $1 trillion mark, and the daily chart is going to be pretty difficult to get a good read on because, Frank, that's a gap into no man's land up here. Gapping into is that the all-time high there on Amazon? If I don't,
I believe
remember
yes.
the price. Yeah,
I believe that yes, it is. But let me confirm that.
It is.
Is it? It's right there. Look at that.
If it,
Cody stepped away. Look at the monthly chart on Amazon. Oh, goodness gracious.
Now it's not. It's not there if it doesn't. It's the high intraday because we're at 2034. Back in what do we got? 2018 in September. We actually had some prices up in the 2050 range as well.
Yeah. Cody, can you go to the monthly on Amazon for us?
By the way, if you were here yesterday and you heard my analysis, I just will say this. I mean, we don't get them all right. There's no doubt about it, but I nailed this one, and it always feels better when you do nail something. You're like, okay, look at that. I got that analysis correct, Frank. It's easy to crow about it. I understand that.
Hey,
right.
You just enjoyed it even more because you get to crow against your brother, Mark.
Oh yeah, Mark. He was snickering and didn't like my trade on the bidirectional trade, and I had to remind him of it today. Yeah,
you take advantage of the opportunity to gloat, young man.
Especially when he builds those games on the podcast against you.
Oh, he does that. There's no doubt. Yes, we'll punt on that as well.
He game and he's like, how can I make Tim lose?
They enjoy it. You know, I don't mind. It's okay. I've been a punching bag with those guys my whole life, Cody, so I can handle it.
Yeah, he's used to it. He's
are you the youngest of the Justice brothers?
No.
No, he's just the
one
in the middle. He's
I'm just the easy one to pick on. I'm Timmy. All right.
Yeah, he's just
It
Timmy.
is what it is.
He's the nicest one.
Triple top potential breakout here, guys. Significant. In fact, I thought Amazon was one of the target opportunities if the market stayed bullish this year. This is obviously a good look here today, Frank. What was your reaction to their earnings?
I mean, gosh. I didn't get to hear you and Mark talking, but when you said the market maker move was what, 4% was the expected
They
move?
were projecting like 4.5%. Yeah. Now I think we're at 8.5 here today.
Yeah. I don't know who I would have sided with. In hindsight, it would have been you. But if it would have been 8-10% like it was in the after hours, I definitely would have been wrong. I mean, there was just a huge win. And technically it's lining up. And hey, we're holding up a lot better on Amazon today than we are in the broad market. And if you think about, somebody woke up this morning and saw their Amazon up 10%. And, so they had good reasons to think, yeah, let's take our profits. We'll reevaluate, right? Traders have been known to do that. Here's my question. And it'll be something I want to talk with you coaches in the meeting today. With where we are in that weekly, like Justin said in the chat, got a cup and handle on the weekly, breaking out, today's the last day of January. So that would be a break, assuming we hold up relative to where we are right now. Can you get in if this goes above today's high next week?
You can absolutely play this bar by bar.
Yes, you can.
It would be aggressive. I would understand if prudent, disciplined, seasoned traders said, not for me. I'm going
to make us prep it in the meeting.
I think so, because here's the thing: if it goes above 2055, that means the market's confirming, and you've got momentum, and you're clearing
all-time highs,
a multi-year high.
Great earnings. It's That's not my normal style, and what I hope happens. And so, everybody knows this. We'll consolidate up here for the next, for the first 2, 3, 4 days next week. And then mid next week, early the week after, then we break that top. And then for sure, I'll be on board. So, but if we continue this momentum as early as Monday, that is appealing with when we factor the strong earnings, where we are technically on some of these major, these are major price points on Amazon, right? It's not just a previous swing high that we're talking about. Very interesting chart.
Even
Amazon's
if you don't, well, go ahead, Cody. Go ahead.
I was gonna say Amazon's one of those companies that irritate me that they're waiting this long to stock split.
Listen, it's a brave new world, man. They don't like splitting the way they used to. Companies.
No, you don't see nearly as many. Yeah, at least it doesn't feel that way.
One of the reasons to split your stock is to open it up to more investors, because a lot of investors don't want to buy at 2,000. They do a 10-to-1 split, make it $200. I'm going to be picking up shares.
Dude, they don't care if mom and pop buy their shares in Iowa. They just want them to go to Amazon.com, buy their product. They know the hedge funds are buying their shares. I mean, maybe I'm overstating
billions
that.
Of dollars. Yeah, billions of dollars buying Amazon. 2,000 means nothing to them.
Yeah, I mean, that's the thing. Little fish, big fish, right? Even when you're talking about that, I was going to go look at the shares outstanding. Guys, they've been increasing the shares available. They've been putting more out in there, and the price still is breaking into a new high. So many companies the last 5 years have had share buyback programs. In fact, whenever I go look at the fundamentals, that's one of the first things I look at is what the shares outstanding were year over year over year over year. Amazon's been putting more shares into the market, Frank, and they're still bullish. It's a very impressive company.
It's Amazon, it's not going anywhere. I don't imagine. But even if it is, probably not in the short term, I'm going to put that on my breakout watch list. I'm sorry, it'll be there.
Yeah, and I would complete.
Come on, Jeff, you offer a dividend. Come on, what are you doing?
Yeah,
Google doesn't offer a dividend either. It's like, guys, what the hell? Come on.
These tech firms don't always need to do that. I mean, the shareholders have made enough money, Cody. Maybe he's thinking.
Yeah, they don't have to. They don't have to sweeten the deal on us at this point in time.
I'm just being a.
Hey, they're welcome to listen to Cody. I have no objection if they do.
That is such an old man thing to say, by the way. This company is up like 1,000% in the last 10 years, and Cody's like, "Where's my dividend?"
Oh, Cody is the oldest. He is the oldest. Are you 27 or 28, Cody?
I'm about to be 29.
Oh, you're the oldest, about to be 29-year-old guy I know.
There's nothing wrong with that, Cody. That's a compliment right there. Amazon, great one. Got to put on watch list. And by the way, if somebody said to me, Tim, I'm going to wait for it to backfill, pivot, maybe even consolidate for a month, and I might play it middle or late February and kind of project it, I'm open to it. But the minimum, I would say, Frank, you got to put on watch list. I think what you said there a minute ago was dead on. Move on to IBM. Now, their CEO, Ginny, and I do not know this person, been there forever. Don't know every CEO, even on the big ones, but Ginny Renetti, I think, is stepping down from her position. And here it is, kind of gapping up. Actually, not a good thing when the CEO resigns and the stock responds favorably. Probably the market saying maybe it was time for that person to take retirement. Frank, I think they were there for like 20, 30 years, something like that.
Yeah, you saw a couple days ago, LB had the same situation.
I saw that.
They're looking to step away from that. And yeah, it'd be hard not to take that a little personally, I'm stepping aside after all my hard work and watching the stock pop a ridiculous
And I don't remember
amount.
his name on LB. I saw the story too, but I guess he was there for like 50 years. I'm thinking like the 1960s.
Oh, wow. So he was wow.
This is an old dude. Yeah. And built one of the best. I mean, first of all, talk about marketing. That's a guy who built Victoria's Secret. Right.
Yeah.
That became a national brand there over the last like 20, 30 years. So I get it. At the end of somebody's career, maybe it's a good time for him to move on. It might actually help bring in young leadership. We saw it with Walmart, by the way. They hired a 35-year-old CEO. The stock has done great the last 5 years.
I think he should have stepped down back in 2014.
Maybe the shareholders were saying that as well, is what we're looking at.
I bet you when people were saying, hey, things are moving to online sales, like, no, we don't need to move online sales. No. Like pushing against it, being that old 50-year-old CEOs.
I don't want to castigate the guy's
listen,
reputation.
I wish I knew his name because he's a great American. He's been in business for a long time, gave us something that we all can enjoy.
That's
so
right.
Someone who helps
hats off to you,
create
sir.
Victoria's Secret is definitely a great American.
That's right, 100%. The airlines are in the news here, and I want to take a look at Delta and American Airlines. DAL, AAL, the pilots for American Airlines came out and said, hey, listen, we are not flying to China. They were going to sue the airline over that, Frank. And the airline responded instantly and said, hey, we're shutting down flights. It's part of one of the reasons why the market's responding to the risk. They're like, if we're going to shut down commerce and transportation, what are the domino effects happening? And, a real good ETF symbol that you can always bring up here, Cody, is JETS, JETS. Not one I trade, but when I want to look at the whole airline sector, it's one you can take a peek at.
What a good
They're down here. It's not a good look for these stocks here, Frank. What was your reaction to that news? How are you approaching any of these airline companies?
Well, I don't blame the pilots by any means. First and foremost, I'm glad that they stood their ground. Can certainly their health is important. They're weak and they're very. These companies are going to be very susceptible. You guys have been talking about it for a week and a half in various places. These things that casinos, oil, the areas that are susceptible to China definitely would fit the mark. These are, very ugly technically. Jets, I'm not sure if Jets has options yet. I know they didn't used to, or maybe they did and they were just terrible to trade. I remember when they first came out, it was pretty cool. Like Cody said, Jets is a very good ticker symbol.
It is a good ticker symbol, but
not that great, not completely untradeable.
Spread on a $30 ETF.
Yeah, but you got Delta and United. Those are a lot more friendly to trade. So probably, look to the ETF maybe as, like Tim said, just as a little bit of a gauge, kind of that broad overview, and then kind of go picking companies. But definitely an area I'm interested in from a bearish perspective.
I would say so. I'm seeing that index and I'm looking at the news and just you don't know what that's going to do to their earnings, to the revenue, and even just investor sentiment around the stocks. And I'm seeing that thing break down. I'm going to go look at some airline stocks for maybe some bear picks this weekend here, Frank. It's one of the areas I've targeted. Speaking of other areas, target Exxon, Chevron earnings came out. Not great. Exxon actually, they missed by, look at the EPS number here, down 6% of what their estimate was. Came in
real quick, Tim. We'll continue this, but guys, this is mailbag day. So if you got a question, start typing in the chat now.
Mm-hmm.
All right.
Good.
Sorry, I just want to put that in there because we got 15 minutes. So if people got questions, think of them now. Type them in the chat. We'll get to them in a bit.
And he wonders why I make fun of the Cowboys all the time.
I never wonder why you make fun of the Cowboys.
What does that have to do with the Cowboys at all?
You interrupted my sentence to make a point just so that we could be done on time. That's what I had to do with.
Yes, that's exactly what I did.
I know exactly what happened here, young man. I'm an old wise man. I've been around, Cody. I can't use a computer as well as you can, but I see you. I see it. Anyway, Chevron, Exxon, and guys, not great reactions, terrible charts. Energy is straight flat bearish right now here, Frank. I know crude oil's finding support. These big companies in the energy sector are not finding support. This is going to be pretty bare area of our reports this weekend. What do you think?
Oh yeah, energy is continuing to look just terrible. You've got things like Exxon. I'm always really tired of earnings season by the halfway point because I caught that break on Exxon Mobil and I just sat there and watched it. It was a big break on Exxon in my opinion, and it definitely played out that way. And of course, earnings were the next week, so I just had to sit and wave and buy it. Very, very weak. JN Border asked Boomerang on Exxon, not until we see some sort of signals, for me at least, whatever they might be. We are, that's a very, very ugly break. Would definitely need to see some sort of, my general rule is until you break resistance, I'm not buying you. If you're not breaking support, I'm not selling you. Very simple approach, but it served me well. And right now, look at that longer term chart.
That was a little Frank fact right there. I guess we got Geno Gems, Noah Nuggets. We got Frank facts.
What's Tim's?
That's absolutely true. If you're looking to boomerang, you don't just buy it as it's still a falling knife. You don't catch that falling knife. You wait for it to bounce. You wait for it to reverse. Then you pick it up for your boomerang. Yeah. So you need something like this to happen where it starts bouncing around. We get confirmation back to the upside. then you can look to boomerang. You don't try to pick it up now.
And realistically, we'll get it on Exxon. Maybe not in the shorter term, maybe not at these prices. Maybe it's down at 50 before we get that opportunity. We'll get it though. We just, like Coach Mark says, we got to be patient. Let it develop. Am I interested in that? Philosophically, yeah, I am personally, but we've got some pretty good work to do before I'll be there.
I wish Mark was here because I would want to get his perspective on it. Justin in the chat is the coach's mailbag day, which means that you guys can pop questions in. We're going to answer them as we go through the last 10 minutes of our show. And Justin says, is ExxonMobil still a good hold for a long-term portfolio? And I think it just comes down to really what the definition of what your long-term is, Justin. If you're thinking about holding a company that is the biggest energy company in the marketplace, that has business dealings all over the world and still growing and profitable, it's not like ExxonMobil's fundamentals are bad here. The short term, yeah, the chart's not good. The energy sector is not good. Sales have been increasing year over year for 4 years in a row. EPS trends are up. The PE ratio is 18. And guys, most people buy Exxon for the dividend. Dividends will create a floor at some point, Frank. I don't know where it is in short term.
And as a long-term holder of Exxon, right here, when you got that signal it was breaking, you should be buying puts to protect however big your position is, whether that's 1 put, 2 put, 10 puts. You protect that position. Once it finds that floor, you can sell off your puts, and now you're not actually down on your position. You're stark break even because you protected it using insurance.
Mm-hmm.
If you're a long-term holder, that's what you do. So that way you're not actually down on the position because you use the puts to hedge and make up the profit.
Yeah. If I'm a long-term holder on Exxon, whatever I have or haven't done, I'm still the holder, on Exxon, long-term.
I think you're there for the dividend, and you can roll calls and do all kinds of little tricks and whatnot. Yeah, for sure. Depends on your skill set. Justin, I know that's probably how you're approaching it. Execute your plan. I mean, if you got into something based on the idea of having a 2 to 5 year plan in the future, letting a 1 month trend breakdown shake you loose, I don't think is the right idea. I think Cody had the right call there. Learn how to hedge, learn how to add that collar, put option, make your short term a little easier through the options management. Chevron also down, by the way, they missed as well. But I want to look at Caterpillar next here, Cody. Dow component, not good, Frank. Not good at all. Cat's tough swing trade, in my opinion. The volatility is kind of a weird one, but position trading, when this thing trends, it really, really trends. What's your reaction here on Cat's earnings miss and that gap down?
Cat can move with the best of them. I mean, we don't really have any significant support till 120-ish. Like you said, it used to be one of my favorite swing trading stocks, like back in the 2000s, like 2006, 7, 8 time frame. But it's okay, but not my favorite thing to swing trade anymore. But not a good look, and of course, Cat is Cat, right? They're everywhere, so they're going to be affected by this, broad stuff as well. Falling knife scenario right now. So whether or not we're, trading it bearish or whatever, I think right now the bears clearly have control over this thing without really a lot of support. We're kind of in the middle-ish of a range, to be quite honest with you.
I agree with that, but the falling knife scenario is definitely in play here because in the middle of that range, we've even seen it happen August, September, back in May, like Cody pointed out. And Caterpillar is sensitive to international news. Because,
absolutely.
I mean, the way people approach Caterpillar is they think of a global brand who you need global growth. And when we got data out of Europe that they're slowing down, some countries going into contraction, and then you've got the problem with the coronavirus, a company like Caterpillar is not going to do well in that environment. We'll see, long-term in the middle of that range, we'll see how it plays itself out. Can't get to everything, but give me US Steel real quick. It's a popular company in our community. I understand why it gets a high pop, a high ROI. But at some point, guys, that's just a bearish chart. Like let's call this one as it is. It's been bearish now for a long time. I know it was holding support, but when it didn't, Frank. And that's why in trading, you can't trade your bias. If something is changing, you got to make some decisions change with it. I am not a holder of X. I would not be a buyer down here personally. because of many, many reasons, but that problem in Europe is one of them. Frank, what's your read on X? I know this is one of the companies where a lot of people out there listening are going to disagree with me because they trade naked puts on this one. They do boomerangs on this one. What's your read on this?
And I think that's fair. I think doing naked puts and boomerangs makes a fair amount of sense, to be quite honest with you, on US still. Does it make a lot of sense here though? No. I mean, we've broken down, and if you switch over to a weekly, Cody, on your chart, it'll become a little more clear on that end. We've broken down clearly in a downtrend, right? So I don't think that's really up for debate. We don't really have a lot of support until we get down towards those lows and, just north of $6. Doesn't mean it has to go to $6, but if you think about, the prospective buyer, that's where their eyes are likely drawn currently with the way the chart looks as of right now, right?
So exactly where the bottom fishers are looking.
If I'm looking to sell a put, whether it's just to cash flow it or to boomerang it, I assume that it's going to come down to $6. So is right now the place I would want to do that? I guess that's up to me to decide. Better question.
Click on the trade tab real quick. Sorry,
what's
Frank.
my signal? What's my signal to get into this thing? Because I'd argue, there's no bullish signals on a daily or a weekly time frame at the very least.
Cody, flip through the expirations and tell me where we could get a nickel at 6. Can't get a nickel even 49 days out. Maybe you wait till you can get a nickel at 6, I don't really sell naked put 77 days out for cash flow. So it'd be waiting a little bit here.
Yeah. And
I'd be patient with this one.
This would actually be, this would be a play where you actually want to be assigned. So you need
this. I think the best advice is to take Blake's. Blake says, if it looks like a bear, smells like a bear, and growls like a bear, it's US still. Again, I don't think it'll always be that, but it is today. If I'm trying to catch something in this, market selling of this past week, it's not US still. And it's not something that looks like US still. I
wish Matt was here because Matt loves this company, And part of the reason why traders love it is because when you do actually own the shares, Cody, you can make a lot of money on the cover calls.
Oh, absolutely.
If it's a neutral or bullish one. Just until it stabilizes, I feel that risk is just, like you said, Frank, and like Blake pointed out perfectly, probably still just in a short-term bearish.
If you're buying into creating a bullish trade in a downward trend, don't be surprised if the stock drops. Is a really just good rule.
Getting paid $35 on a $9 stock is pretty good, but you do have to know how to manage this.
And last opportunity, guys. If you've got any questions, pop them in the chat.
We had
one that repeated from Mohammed. Coaches, should we keep our bi-directional strategies guard in the market? I'm asking because one news market falls, and with the other one, it goes to the sky.
That's an excellent point. And when we get into a market that's very news driven, like most of the, fourth quarter last year, it was just, there was no news, right? Talking heads, sometimes we would make it sound like there was nothing going on, right? When we get into a very news-driven environment, you have to expect more volatility. You don't have to like it, but you do have to expect it. So when we're thinking about our directional trades, it's a good cash flow environment for sure, but if we're thinking about our directional trades, a couple of ideas. One, be open to both sides, absolutely, right? And no, open to a bull play, open to a bear play. And if the technicals set it up, I like debit spreads during volatile markets. They help cheapen the option, right? Because
takes the volatility risk out.
Volatility, and they're a lot more mellow. A lot of times we go buy a call or a put option, and just a little move is really noticeable on a call option, right? So, and it can freak us out a little bit, and we no longer stay true to the chart. And so, debit spreads can be a vehicle that allows us to. They're just a little bit more mellow. We can give them a little bit more room because, we lost 60 cents while we were talking on our long option, but we did gain 30 of those back on the short option. It feels better, right? It feels more comfortable for at least a lot of us, I think. The one thing I think traders get into big trouble with when we go into these shifts, we go from being really mellow to being volatile, is they kind of play the middle. And what I mean by that is they're not giving their exit strategy, swing levels of support, giving it good wiggle room. So they're getting knocked out early, but they're not being super tight. They're not going intraday. They're trying to, have their cake and eat it too. We kind of go into the middle. Honestly, I think both both edges make sense in a volatile market. Given some room, make sure that support breaks or that resistance breaks before I, exit my trade, or go short term. Hey, let's use this intraday chart to manage these trades. But playing the middle, sitting on the fence, is very difficult in volatile markets when it comes to managing your trades, in my experience.
Mm-hmm. No, I think that's a really, really good take on that, because especially like little things in there. And what did you call him, Cody? Frank's, facts? Frank facts. I like it. When you do a debit spread, that does take the volatility risk out. It's a great way to play in a market like this. The VIX is popping a little bit here. It's kind of explaining that as well. We always got to take a peek at the VIX when Matt's gone. It's when we get to do it. In fact, we should bring it up when he's back here as well, Cody. See if we can
just a new part of the routine. See if we can sell him on it.
There's no doubt about it.
Something tells me no.
One last one actually from our clubhouse over on our website, which, by the way, you should absolutely be a part of that clubhouse. It's a great app you can install on your mobile device and take it on the go and communicate with your fellow traders outside the webinars and the halftime reports. Tom Lamb out there said, "Hi, guys. As a pro member of the community, I found the Tackle Trading Journal super useful." Thank you, Tom. Those journals are amazing, by the way. Make sure you're using them out there. Absolutely. Then he continues, now I'm approaching its limits at 100 trades. I wonder, is there any trick to add more columns or simply use a new file to keep journaling? And there's several answers here, Tom. I'm going to give you the short ones. Number one, email team@Tackle Trading whenever you got an issue like that you need some help with, And Mark over there, he'll drum up an answer for you from one of the coaches. Second is, I got a question on this just a few weeks ago, and I've got a version that has 1,000 journal entry lines in it. Just buzz me an email and let me know, Tim@Tackle Trading. Happy to help you. Third answer to it is, if you know how to use Excel, Cody, there's all kinds of ways you can manipulate this, right?
Oh, absolutely.
Yeah.
So yeah, you can add columns in there. You can adjust it. You can copy the entire. And this is actually the way I do it. Is I break my trade journal up into quarters. So I'll use the trade journal and I'll break it into quarters and I'll just rename it, Q1 2020, and then that way, I'm not going to fill up those 100 trades. And if I do, then I'll add some rows in there. But then I can also get a better idea of, how I'm doing quarterly, not just yearly. I can see like, okay, this quarter I'm doing really well. What was happening in the market? So when I do my backwards analysis on my trading to see, where were my weak spots so I can improve on those, where are my strong spots so I can add to them. Because once you kind of figure out what type of trader you are, you want to, add to those type of trades, because that's obviously what you're better at. And, if you're trying new strategies, make sure you back test it and do it. Don't just, jump right in and start doing, inverted spreads and things that could freak you out. And if you try it enough times and it's just not working for you, then don't waste any more money at it. Just do the things that you're good at.
That's a very good bit of advice.
That was a very long-winded and good. It really went somewhere, Cody, but a really long-winded yes for you there, Tom. Yes, there is a way to do it. So we got time for one more. Fortino, we missed it. He had one. I think it's worth talking about if we have another minute.
Yeah.
And he just asked, if you have a smaller account, say less than 10K, how do you be picky on things in the reports?
Ooh, good question.
Trading in general. And so, go ahead. I'll let you take that one first, Tim.
Well, first of all, I love the question. And actually, I got a request from our marketing manager, Jessica, to do some videos on how to trade a small account. And guys, do you think that would give you some value? Those of you out there who are starting smaller, I started with a small account, Frank. I think most people do.
I did, yeah.
How to trade an account 10K or less. And there's some ideas. The number one thing I would say here, Fortino, I don't care if you got $1 million, you should still be picky. Okay.
Yes.
It does, on the reports, and in the markets in general, there's so many opportunities to use your capital, and good opportunities with reward to risk and probability in your favor that can fit a system. Frank, nobody can trade everything.
Nope,
it's just not the design. It's not the concept. So how do you get picky? Same way you'd get picky at 100K, but really what it come down to, can I afford it within my system, right? Some stocks might price you out of it a little bit. So you might have to look at cost. And then second, are the options liquid to trade within my system that I can still position size? The number one thing though, Fortino, do not ever violate money management or position size rules. I don't care if you're starting with, 10K, 100K, $1 million, doesn't matter. Money management is the key to good trading in the long term, in my opinion. Frank.
I couldn't agree. I couldn't agree more.
I think the easiest way to kill a small account is when you're trying to be picky and you're entering the trades early. Because if you should be going through these reports, or at least move them over into a watch list and go through it every day and only look to trade something if it's triggering. If you're seeing a setup and you're like, oh my God, this is a beautiful setup, it's going to work, and you get in early and then it doesn't work, you're going to lose money.
Sure.
And if you have a smaller account, you just locked up capital in a trade that's not working.
By the way,
wait until things trigger before you put the capital into it and get into that trade. That's how you be picky. Follow the trade rule.
Sure. And you have to have the ability to play both the Bulls and the Bears team on these reports too. I don't care what the account size is. I saw a ton of the Bears like Stay and Roku and Tech on the option stock report this week, guys. If you only ever trade bullish, you're going to miss opportunities like this. So learn put options.
Trigger right there. It just it played so perfectly. Hit below the trigger that we had. It just went past the first target that was at 13. This was on the stock report as a bear pick over the weekend. This would have been a very easy, and it's a cheaper stock, so smaller portfolios could have played this pretty simply. And even buying the stock directly, you should have, what is it? A 60-cent difference right now? 60 cents times 100 shares, you're up $60 in the week.
All right, last one here, guys. Who you got in the game on Sunday?
Ooh, I got one thing for Tino that I'd like to add, and then I'll tell you.
Yeah.
Consider the amount that your position size too. I mean, obviously the risk you have to, as Tim said, that's, in my opinion, that's the number one thing. And there's, number one and number two. But what I mean by that is if you're weighing two trades, and all things being equal, if one of those trades, let's say you're going to trade it with, buy-in puts or whatever, if one of those trades you could buy two puts and one you could buy one put, and assuming all other things are equal, I like the one going into where we have the two spreads or the two puts or whatever. So I have a little bit more management flexibility. I don't have to think completely in terms of stay or go, black and white, if you will. So that can be a determining factor. What's going to give you the most flexibility? I'd rather, have 5 spreads than one spread, all things being equal, because I could scale out easier. I can pull off a contract or whatever. I have a lot more flexibility. And of course, risk to reward, as you're deciding which ones, again, all things being equal, if one offers a little better risk to reward than the other, well, hey, that's a good tiebreaker too.
That's a beautiful point, Frank, because you build on 5 trades and one starts going against you, you exit that one, let the other ones go, versus trying to put all that same capital into one trade and it not going your way. That's like trying to swing for a home run every time you get to the plate. Sometimes you just need a bunt. Sometimes you need a base hit, because you get 4 base hits, you scored a run. It does the same thing as a home run, but you don't always swing for the fences.
For sure.
You're an old soul, Cody.
A lot. You are.
Preach bunting and moving, playing small ball. I like it. There
you go.
Who you got in the game, Cody? I'm gonna go you first. What is the line? I'm trying to look it up. I can't find the line.
I haven't checked it, but I think it opened at 7.5 San Fran. I think that's what Maddie said.
All right, let me pull up my site.
Which case?
No, it's a 1.5 spread right now. So I couldn't open. I would be shocked.
I can't imagine. Yeah, I thought that.
Yeah, it's not a big spread at all. I got the Chiefs. I think Mahomes and the Chiefs are gonna do it. I know that the 49ers got a lot of momentum behind them, and they had a fantastic season. But I think the Chiefs have it.
I'm going the Niners. Give me the team with the better defense. My one of my favorite players, Manny Sanders, was traded from the Broncos to San Francisco. I'd love to see him get another chance for a ring. Kyle Shanahan is the coach of the great Mike Shanahan, former Bronco coach. There's more Bronco ties to the Niners, and the Chiefs are one of our bitter rivals who are going to be causing us trouble for the next decade with Patty Mahomes. So I will be cheering for the Niners.
Although you've in every league you're in, you picked him up in the first round. So
listen, it's fantasy. I'll support my ball club. Come on now. Yeah. That's where you separate. I love Patrick Mahomes. I just wish he played for the Broncos instead.
What I will say with the 49ers defense, I think one of the best trades they ever made was picking up Richard Sherman from the Seahawks, not putting him in as safety, arguably the best safety in the league or of all time, and instead they put him as a corner. I was seeing the stats during the playoff games, he had as many catches as a corner for interceptions as most actual wide receivers do. And it was showing how he's basically an average receiver playing as a corner for the number of interceptions he gets. It's like, that's amazing. Taking a safety who understands the play of the field, how to read it, and putting him as a corner, that was a smart trade on their part.
Last one, and for me, it's a true pick 'em. There's no question about it. I'll take Mahomes in Kansas City. I think he's just that good. And that's hard for me to say because I kind of would rather have the 49ers win. I love throwback defenses and run games, man. I mean, I don't even think Garoppolo threw 10 passes in the NFC Championship game.
No, he didn't, man.
I mean, it was really incredible watch. Last one here, over under 54.5. A lot of points are not that many, Frank.
Over 54.5. I'm going to go with Cody and Bert. I'm going to go over as well.
Yeah.
I think that didn't even take me a half a second over.
Well, it's because you were cheating and you were reading Bert. Bert said the over 3 minutes ago.
Good call. Enjoy the show here, guys. Always a lot of fun. Thanks for being a part of it out there. If you are watching still and you have not done it yet, give me a thumbs up on the way out. Subscribe to our channel. And no better time than now to take action for your financial future and join the pro community and tackle trading. Quite frankly, just got to go check it out. You know, there's no way to describe everything we do in the short bit, but we're going to go build some amazing reports to help our community next week, and we're going to start working on that this afternoon. Frankie, great job. Cody, great job.
Hey, thank you. Always a pleasure being here. Thanks for having me, Halftime Crew. Y'all have a great weekend. We'll see you next week, huh?
Peace out.